All right, everybody. Hey, it's Eric here again. And today let's talk about the bad housing news. It's not the bad housing crisis news that everybody's hoping for. It's worse. So please do me a favor, like, click, subscribe, do your thing, share. I would super duper appreciate it. All right, on to the news. So today they just announced that they're talking about changing the way a 1031 exchange works. And before I get into that, that's a critical investor tool. I want to talk about housing in general real quick to give you a little bit of background of what's going on. So first of all, unless you've been under a rock, housing prices are ridiculous, absolutely insane. And I cannot stress enough, the quickest way to build wealth is buy a house. If you are not a homeowner, you are likely in the bottom half of wealth in this country, possibly even the lower 20 to 30% of wealth in this country. So the quickest way you can build your net worth is buy a house. And that's always been the thing, right? You buy a house, you buy the maximum house you can afford and move into it, and it'll appreciate, and you pay down the payments, and there's tax incentives. It's the American dream. So let's put that aside. So if you're not in a house right now that you own, it's going to get worse. And so they just decided to describe this whole 1031 taxing. Again, not want to jump into that yet, but the way real estate works is as an investor, you buy a house. There's only a couple of ways to avoid paying taxes on said house. One of them is you live in it for 2 years, and then you get a certain time period where you can sell it and not have to pay taxes on the capital gains. Capital gains is the highest tax bracket right now. And so that's one way of doing it. It is hard because you can only live in one house at one time. But a lot of people do this. They'll buy a new house every 2 years and then they'll sell the other one with the gains and it's all tax-free. The other vehicle is you buy a property that you don't live in and you rent it out, you make it an Airbnb, whatever. And you get to what's called depreciate it, which means you say it's going to lose value over 27 and a half years. And once you complete a good portion of that, or get to that point, you're like, okay, I need to sell it because you can no longer depreciate it for the tax reasons. Then you sell it and you put it in this thing called a 1031 exchange, which means you can then take it for a time period tax-free and invest in another property that's more expensive. And you do not have to pay the capital gains on that. What they just said and what Biden is going to review tonight is that the maximum number that you can do that for capital gains is like $500,000 a year. And when you look at big commercial properties like apartment buildings or commercial properties or large buildings, large real estate, $500,000 is really nothing in that scope. And that's where a lot of investors, put their money because it appreciates more, they can make more, it'll go up more faster. It makes sense. So they roll that into another property. It's being put back to work. Their investment grows, and there's a benefit to society because it's places for people that can't afford a house to live. Now, they're removing or talking about removing this benefit, which means an investor is going to be like, well, what the heck? If I can't roll this money, I'm not going to buy a big property. I'm not going to buy a big multifamily property. I'm not going to buy commercial real estate. I'm going to buy small houses. Because if I can only roll over, $500,000 in profit after a certain amount of time, well, they're going to buy small single-family houses because they don't appreciate as much, and it just makes sense. But there's a problem. We are massively short on single-family homes right now, and that's what's driving the price of them up. So now we're talking about incentivizing investors to stop buying large properties and jump into the smaller market, which is going to further drive prices up. This is going to be a huge problem. Furthermore, they're discussing a new home buyer program, which is like a $20,000 in down payment assistance for new home buyers. Now, you think new home buyers is somebody who's never owned a home before. All right, maybe we can get on board. But what they're talking about right now is the requirement would be is you have not bought a home or owned a home in the last 3 years, and neither have your parents. Well, there's a lot of people that in 2008 got out of the house owning market and didn't get back in. And as of recent with the pandemic, that's happening as well. That's a lot of people that could qualify for this down payment assistance. And well, again, they're looking at single family homes, which is also going to drive the price up of those homes. And since we already have a shortage, and they're talking a shortage of a couple of million homes, that single family entry level home is going to go through the roof, because now we're talking, we've got investors wanting to get into that space, not wanting to, being kind of pushed into that space. You've got new home buyers or buyers that haven't owned a home for at least 3 years getting into that space on an already hot market. Everybody's been waiting for the crash and for things to get cheaper. And if these two things happen, it's going to explode even further. The average person wanting to get into an average house, it's going to be impossible. This is bad news. I mean, this is going to blow up the housing market further for people that invest in houses, as well as people that want to own their, their average home. And if the best way to build your wealth is by buying a home, you're going to be pushed out of the market, and it's going to be even harder. It's going to be even harder for you to build your net worth if you don't have access to that. And then for investors, they're the only real winners, right? You've got people, if you own an average home today, you're a winner, because it's going to go up a lot probably if these two things happen. And two, things, why would you want to sell? Because you won't be able to buy anything else. So there's all kinds of problems there. And then from an investor standpoint, when they get out of these larger properties, they're going to buy smaller properties, which you think it's a problem now where cash offers are blowing up things in certain markets. Just wait. This is going to blow up things and be bad news for everybody. So watching this closely, there's a couple of announcements coming out, but this is not good for the housing market. And the crash that we've all been waiting for, this looks like exactly the opposite. And I know a lot of people are concerned. Hopefully that gives you some things to think about. Again, the best thing you can do to build your wealth is to get into real estate. Even if you're not going to live in it, it's the fastest way. I mean, I bought my first house at 19, and it was the best thing I did. I was able to leverage that down the line and start businesses, and it just happens fast. And think about it. Put this in perspective. If you were to start a business tomorrow and you go to the bank and say, hey, I need $250,000 to start a business, they'd laugh you out of the bank, especially with no credit history and no big loans under your belt. You go to the bank and say, hey, I need a $250,000 loan for this house. They're like, okay. There is no quicker and easier way to build trust and wealth. Buying real estate. Let's hope this doesn't prevent people from getting that market and getting into that market and living the American dream. Hopefully this gave you some things to think about. I already said that, but this is pretty serious and pretty scary. And I worry for the kids and the younger millennials that don't own a house today. So anyway, please like, share, subscribe, comment, think about it. On top of everything, this is crazy. So hopefully I'll see you in the next video, and thank you for watching.